Hey everyone, welcome to High School Dropout's Advice. Today we are talking about Archer Aviation and Atlas Crest Investment Corp, which trades under ACIC at the New York Stock Exchange. ACIC will be the spec for Archer Aviation. This video will introduce you to Archer Aviation and let you know what they have planned for the future. Then we will compare it with the few competitors, and after that we will look into the price and evaluation. After the evaluation, we will decide if it's a time to invest in the spec. Before we start, I will like to ask you to subscribe to my channel to get updated about exciting investment opportunities. Videos like this take a long time to make. Research, scripting, shooting and editing take a long time. Let me start by showing you the drone. We see a nice designed drone which also has some nice specs. We see a battery of 75 kilowatt hours, which is, I would say, the standard size nowadays. There are stronger options out there, but I think those will be implemented later. We see a top speed of 150 miles per hour, which is aligned with other passenger drone makers. A range of 60 miles is acceptable. This is lower than Joby Aviation, but both will start producing their final drone in 2024. So I think there will be some changes coming. The calculation of the range can be found here, and it's worth showing you that they only use 37 kilowatt hours for the calculation and decided to let the 15 kilowatt hours as a reserve. If we count the reserve into the range, we will get a range of around 85 miles. The plan for Archer is to start their early launch in highly congested cities such as LA, Dallas, Fort Worth, San Francisco, New York and Orlando. The range is enough for those cities. We all know that aerial transportation will be quicker than ground transportation. We see that it will be around 3 times faster, but I want to show you that the cost per passenger where Archer is claiming is only $50. I'm a little bit skeptical here. I think operating the drone with a pilot, maintenance, cleaning service, check-in and all other little costs will exceed $50 per person. The cost for Archer should exceed $50 per person in my opinion. If it's that low, I can see Archer offering tickets for $150 per passenger or closer to $100 per trip. It's also very interesting to note that aerial passenger transport generates a lot of revenue, as you can see here. We can argue that if it's really 18 times higher, because I don't see in the math that they have accounted recharging time. Maybe a battery swap like NEO will become handy for this kind of industry. I just don't think even like fast charging to 80% under 20 minutes is an option here, since the original range is in most cases already at its limit. So charging 100% will take longer, but there shouldn't be any doubt that aerial passenger transportation will generate more revenue. All the little things Archer put in their investor presentations are nice to see, but we need to understand that those also apply to other passenger drone makers. But one undeniable advantage Archer Aviation has is they have 2 strong partnerships. Undoubtedly, we can say that United Airlines is a strong partner, and we have Stellantis, a car manufacturer for Fiat, Chrysler and Peugeot. I have noted in my Ehang video, which I link up here and in the description below, partnerships with car makers will happen. If we look into the far future, flying cars and drones will replace EV cars. So car makers have to partner or acquire passenger drone makers before they get too big. What I need to add is that United Airlines has ordered 200 drones from Archer Aviation, and the order is worth $1 billion, with an option to add another order of $500 million right from the start. Archer starts with $1 billion in backlog, which is a really great start. But I don't think this is too bad for other drone makers, because I believe the later partnerships will be stronger. I think the potential partners are still checking out the market and see what is out there before they commit to a relationship. So I think this will benefit both parties more, and the first deliveries are in 2024 anyway, so there is still some time before a commitment. This is like in real life, where you invest your time to find the right wife or husband. Not every investment is great, but this is another topic. So let us compare a few things here. Archer Aviation has prepared a schedule here, so we can compare the drone manufacturers here. I think the more passenger a drone can fly, the better. There's no question about it. Piloted versus autonomy, I would say this is a close call. Piloted has the advantage of starting earlier because fewer certification and tests are needed, but it will cost way more to operate in the future. So I think the more future-proof should be autonomous. We see some significant partnerships forming here with Toyota and Joby, Boeing and Wisk, and Daimler with Volocopter. As I mentioned, the back order of 1 billion is an advantage for Archer at the moment. I'm actually not so worried about the range of the drones at the moment. Better batteries are coming over the years, which can replace the current batteries. So I don't think there will be a big range gap in the future. Let's talk about the addressable market and shift our focus on the financials to determine if Archer Aviation is a buy for us at the current rates. We know that the addressable market is at around 1.5 trillion, and I think it can become more as development goes on. An evaluation of about 3.8 billion and 4.5 billion with the closing price of February 26 seems not overpriced when we consider that Joby Aviation got an evaluation of around 6.6 billion without having a 1 billion order in the backlog. Archer would receive 1.1 billion in cash after the merger complementation, which should help the company sustain the next couple of years. The merger should be complete in the second quarter of 2021. Here we have another source, which puts the evaluation at around 3.8 billion. So comparing this with Joby Aviation makes me think that Joby is overvalued or Archer is undervalued. Both are addressing the same market. Joby got better specs and is a little bit further in development, but lacks a powerful partnership. So for me, this is a close call and should not have this wide gap of evaluation. But I can explain this with the higher profits Joby Aviation was forecasting. They will have bigger shoes to fill in the future. Let's have a look at the price action. We nearly hit the IPO price of $10, which I think is a great buying opportunity. We are buying in a high potential growth company with a relatively cheap evaluation versus Joby Aviation. The current tech, EV and drone stock sell-off become quite handy here. Considering this, the $10 to $11 price is a good one to pay if you are a long-term holder. But these are stocks that will see a lot of volatility in the next couple of years because of media attention, hype and development. But it's also undeniable that urban aerial transportation will be the future, and we have to invest in the future to make money. In my opinion, if you decide to invest in this industry, it's okay to split your money and invest in all of them. There is enough room for each company to grow, and we are in a way too early stage to declare a winner. Like most industries in our economy, there will be a couple major players like Uber and Lyft, Apple and Microsoft, and all those car makers, and the big tech companies, of course. We don't need to love the company, we just want to build wealth. Anyways, for legal reason, I have to say I'm not a financial advisor. So remember, your money is your responsibility. I'm just a guy on YouTube. Please do your own due diligence and try to make the wisest move. Don't forget to share, like and subscribe. Many thanks. See you hopefully in the next video. Thank you, bye.